Whoa, the US debt ceiling has just been lifted by $1.5 trillion. So we're not going to have a huge crash or crisis in the markets anymore. This is good for the markets, right? But what if I told you this is actually bad news, very bad news for the overall markets? So basically it's the House of the United States that has passed the 1.5 trillion debt limit increase, but the Senate hasn't passed yet. See, the Senate is controlled by Democrats who want to raise it by a lot more, from 31 trillion right now to $51 trillion. That means the country, United States, will be able to borrow not $31 trillion, but $51 trillion in the future. And not every 2 years it has to come back and say, can we please raise the limit a little bit more? Can we please raise the limit a little bit more? So it's a battle between the House and the Senate. But first, I'll tell you, if they don't raise the debt limit, if they do not raise it, it's going to be disastrous because the United States government's already run out of money. See here, this is how much the United States government has in its Treasury General account. Think of the one savings account that the United States government has, right? It's basically here, right? It's already pretty much gone to zero, and then it bounced a little bit because tax receipts, right? They collect taxes from people like you and me, and so they've got a little bit more money, which is still very little, and within about a month or so, they could go back to literally zero again, and they have to shut down the. I remember last time when Trump was in power, or when Clinton was in power, they shut down the government for like 17 days because the government literally had no money, right? Couldn't borrow any more money to pay its workers, to repay its debt. So that's why they're trying to lift the debt ceiling. So when you think if a country operates like this, it doesn't have money to pay its own debt anymore, not to repay its own interest anymore, don't you think that their debt should be downgraded to be like junk debt, to be like, if that happened to you as an individual, you won't even be able to get a loan? Well, that's exactly what happened in 2013, but guess what happened to US Treasury markets? See, they downgraded US Treasury bonds from A to A- in 2013, but the bond market actually went up. That is because everything in this world right now is priced around the US Treasury bond market. It's seen as the safest market in the world. If it collapses, if it gets downgraded to junk bond level or whatever, the market, the world just doesn't know how to operate. And what's happening right now is they're trying to lift that debt ceiling, so basically more money can come into the savings account or the Treasury General account of the United States. See, every time it goes to zero or close to zero, they lift the debt ceiling, so more money comes in, right? And now more money comes in, they're trying to make more money coming once again. But when they do lift the debt ceiling, what happens is then the Treasury is allowed to sell Treasury bonds again to get more money to borrow more money, right? Lift the debt ceiling into the Treasury General account. If more money comes into their account from the markets, then that's less money in the markets to push the markets up itself. That's